And we touched on it earlier, the handling of foreign trusts. We know that there's no tax advantage to it because everything still needs to be declared. It becomes transparent, and you're taxed on whatever the income or the assets, if it is a wealth tax is being triggered. It offers no tax advantage, but
income distributed by the trust. If it is income capitalized in the trust and it is not distributed to the beneficiaries, there's no taxation.
Oh, I see. So you can achieve tax deferral. But there will be an onerous reporting requirement, right?
Yes, so you have to report every year
everything,
the market value of the assets in the trust and the income generated by which has been capitalized in the trust.
Right. So the tax authority in France would know that income has been gathering within and it's not being distributed to you.
Exactly. It's a way for them to control what happened because it goes up. It can go up and down.
And is there any difference in the treatment, how the income is taxed, if it's taxed in the year in which it is earned versus when it's deferred and distributed further on?
It's a gray area because the tax code, we have a provision which says that any distribution should be taxed as an investment proceed, which is taxable in France at the rate of 30%. But we have other provision which claim that any distribution should be treated as a donation if the settlor is still alive or as a succession or subject to succession died. And the rate is much higher, is 45%, more or less. There is a gray area, and you have to take into consideration that it will be very complicated to get a tax credit for any taxes which have been paid by the trust on the income generated by it, especially in the US, or the trust is subject to tax, or the beneficiary, if they are US tax resident, can be subject to tax as well.
Okay, so there are two aspects to that. There's what we call in the US a grantor versus a non-grantor trust, right?
Exactly.
So if it is a grantor trust, it's set up by someone and it's revocable and that person is still alive, right? Then in a way, it can be treated as a gift. So that person is giving you a gift, right? And in that scenario, would the gift incur any taxes?
It is treated as a gift in France if there is a distribution, or if the settlor dies. As long as it is not distributed, it remains within the trust under the responsibility of the trustee. There's no taxation in France.
There's none, right?
None.
Once a person is still alive.
But I know from my experience with the US trust, but if you have a grantor trust, the settlor is subject to tax in the US.
Exactly.
And if it is a non-grantor trust, the trust is subject to tax in the US.
Perfect.
These taxes, which would be paid on the income generated by the assets of the trust, these taxes will not form a tax credit in France.
Get the tax credit, but if the person is still alive and the trust is revocable, or what we call a grantor trust, would any benefit or asset or income that is distributed from that grantor/revocable trust, person is still alive, to a French tax resident, does that incur any taxes in France?
Yes. For sure. Any distribution will incur taxes in France.
Gotcha. All right, so that's the first angle. Now, the second angle, again, just to clarify, there's no difference in how it is taxed, whether the income is distributed in the year in which it is earned versus accumulated and distributed later on.
But it's the issue, it's the gray area. We don't have clear guidelines on this from the French tax authorities, and we don't have case law as well. So complicated.
Gotcha.